Welcome to ValueVest Daily. All right, let's get right into it. We've got a massive earnings event coming up in just a few days for a stock that, well, has been on an absolute tear. The company is Ondas Inc., ticker ONDS. And the big question on everyone's mind is this thing a rocket ship just refueling for the next launch? Or is it a high-flying trap that's about to spring? That's what we're going to figure out.
So here's how we're going to break it down. First, we'll look at what ONDS actually is, the high-stakes bet you're making. Then, we're going to dissect the fundamentals. You know, the wild growth story versus the pretty tough financial reality. From there, we'll try to read the market signals by digging into the stock chart. Then, we'll zoom in on the earnings event itself and what to watch for. And that'll all lead to our final verdict on the risk versus the reward and what your next move might be.
Okay, so first things first, what in the world is Ondas Inc., right? Before we look at a single number, a single chart, we have to get what the company's all about. What's the story here?
So, at its core, Ondas is a tech company, and it's playing in some of the hottest spaces you can imagine. They've got two main parts to their business. First is Ondas Networks. They do private wireless tech, but honestly, the real buzz, the engine that's been driving this stock through the roof, is their second segment, Ondas Autonomous Systems. This is their AI-powered drone unit. And here's the kicker. They've made a huge strategic pivot to focus all this cool tech squarely on defense and security. We're talking about AI that spots threats for counter-drone systems or drones that can navigate tricky terrain for border security. This isn't just a part of their story, you guys. This is the story. It's the whole thesis.
Now let's get into the numbers. And this is where the plot really thickens. It's this classic battle, right? On one side, you have this absolutely explosive growth story. And on the other side, you have the, well, sobering reality of the company's finances right now.
And boom, here is the bull case in one single number. Just look at that. 582% year-over-year revenue growth. This is the kind of stuff that gets investors' hearts pounding. It tells you that their big bet on the defense industry isn't just a nice idea, it looks like it's actually working, and they're catching a massive wave of demand. This is the number that fuels that whole narrative of a tiny company about to become a huge player. But here's the other side of that coin, a profit margin of negative 172%. This is that sobering reality we talked about. It means for every single dollar they bring in, they're spending way more. So this tells you immediately, ONDS is what we call a high-burn speculative growth story. They are torching cash and sacrificing any kind of profitability, all in the name of growing as fast as humanly possible. This is the number that gives the bears all their ammo.
Okay, let's try to put all these pieces together. Look at the revenue section. You see about $25 million in revenue over the last year. But right below that, their own guidance for 2026 is $110 million. They are literally projecting their business will more than quadruple in a single year. That's incredibly bold. Now let your eyes drift down to profitability. A net loss of almost $48 million on that $25 million in revenue. They burned through $34 million just from operations, and this is why the balance sheet is so critical. They just raised a ton of money, which is why they're sitting on a huge pile of cash, $452 million. That cash is their lifeline, it's their runway. And finally, look at the valuation. A price-to-sales ratio of 63. The market is pricing this thing for absolute, flawless perfection, not based on today, but on what it could be years from now.
So, you might be asking, where's that $110 million number even coming from? Well, the growth drivers are real. They're landing huge deals like a $20 million border security contract and the $30 million demining program in Israel. I mean, for a company that just did $25 million in revenue, these deals are game changers. But the risks are just as big. This whole model is super speculative. There's huge execution risk. Can a small company actually pull off these massive government contracts? There's always the risk of more shareholder dilution if they need more cash. And of course, regulatory stuff, like getting FAA approvals, can always slow things down. The future looks bright, but it's definitely not a straight line. Okay, so we've got the story, we've got the financials. Now let's switch gears and see what the market itself thinks. How are traders actually pricing all this hope and all this risk? Let's take a look at the chart.
And yeah, there it is. This is what happens when the market buys the story. A mind-blowing 1,100% run-up in the last year. The stock went completely parabolic, just launching from under $2. This chart tells you a story of insane momentum. But, as we all know, a chart that goes straight up like that, it usually needs to take a breather, which is exactly what we've seen lately.
Now, before we really dive into the chart, there's a key term you need to know that a lot of traders are watching. It's called the golden cross. It's a classic bullish signal. All it means is that a short-term trend line, like the 50-day average, crosses up and over a long-term one, like the 200-day. For a lot of chart watchers, this says the long-term trend has officially flipped positive. And importantly, ONDS has this pattern right now.
Okay, so what you're seeing here is basically a tug of war on the chart. The bulls, they're looking at the left column. They're pointing to that golden cross, the fact that the long-term trend is undeniably up, and that the RSI isn't overbought. But the bears, they're looking at the right column and seeing some cracks in the short-term picture. The prices slipped below some key moving averages, and maybe most importantly, that recent drop happened on pretty high volume, which suggests sellers were serious. So the chart is kind of telling two different stories at once.
And all that brings us to the key price levels to watch, especially with earnings coming. The most critical zone, bar none, is the support between $9 and $10. That is the line in the sand. If the stock can hold that level, the bulls will call it a healthy consolidation. But if it breaks, then you start looking at the lower levels. On the flip side, if we get good news, the resistance levels to break are $10.50 to $11, and then of course the recent highs up around $14 to $15. These are the battlegrounds.
And this quote from the trading community on X really just nails it. The stock is in repair mode. It's not falling apart, but it's not taking off either. It's trying to heal from that recent drop. And everything, absolutely everything, hinges on that $9 to $10 support zone. Hold it, and you build a new launch pad. Break it, and you could be looking at a much deeper fall.
So you've got the fundamental story, the financial pressure, the technical battle, and it's all about to come to a head. The catalyst, the event that's going to force the issue one way or the other, is the earnings report that's right around the corner.
So get your calendars out. The key dates are Wednesday, March 11th, when they drop the numbers before the market opens. But maybe even more important is the conference call, which is on Monday, March 16th at 9:30 a.m. Eastern. That's when we get to hear directly from management and get all the important color. So what is Wall Street actually looking for? Well, for the fourth quarter, the expectation is for revenue to land right around $27.5 million. For earnings per share, or EPS, everyone is expecting a loss of between 4 and 6 cents per share. These are the numbers to beat. But look, the headline numbers are just one piece of the puzzle. The real meat is going to be on that conference call. Here's what you need to listen for. 1. Any change to that 2026 guidance? Do they still feel good about that huge $170 to $180 million target? 2. What's the latest on their big defense contracts? Are they hitting their milestones? 3. What's their cash burn look like now? And finally, any talk about a path to actually making money will be huge. Honestly, what they say about the future will matter way more than the numbers from the past.
All right, we've gone through the business, the financials, the chart, the catalyst. Now it's time to put it all together. We've got to weigh the risk versus the potential reward here and come to some kind of conclusion. And really, the whole investment case boils down to this slide right here. In the pros column, you've got that incredible growth in super hot industries. You've got a pile of cash to fund that growth, and you've got real deals that show they have momentum. But in the cons column, there are no profits, the valuation is sky high, priced for perfection, there's always a risk they'll sell more stock, and there's that huge question mark around execution risk. Can they actually deliver on their promises? So let's just lay it out as two competing stories. The bull case says the fundamentals are all about the revenue boom and the cash they have to fuel it. The chart just shows a healthy consolidation before the next leg up. And overall, it's a fantastic way to play the defense and drone theme. The bear case? It says the fundamentals are totally unsustainable with those huge losses. The chart looks like it's about to break support and drop hard. And overall, this is just an overvalued story stock that's one bad headline away from disaster. Both stories are powerful, and earnings will likely tell us which one is right. And that brings us to the end. So, what's your next move? Let's wrap up with a final thought and, of course, a very important disclaimer.
Okay, first and foremost, please listen to this carefully. This entire breakdown is for educational purposes only. It is absolutely not financial advice. It is not tax advice. Ondas is a very high-risk speculative company. You have to do your own homework and talk to a professional before ever making an investment decision. So, to wrap it all up, Ondas is a perfect example of a high-risk, high-reward stock. The growth potential is massive, you can't deny it, but the risks, from the valuation to the execution, are just as big. This upcoming earnings report is a true make-or-break moment. Please subscribe, like, and share ValueVest Daily for daily learning opportunities before you put your money to work. And one more thing, please put in a comment if you want us to deep dive into any specific high-risk/reward opportunities. Thanks for watching.